Hello traders, Gary Wagner here, just about 10:15 in Honolulu, 4:15 in New York. It is Tuesday, September 13th, 2016, and this is the daily report for gold and silver. Equities markets, after trading in triple digits to the upside yesterday, triple digits to the downside, almost 400 points on Friday, down another set of triple digits, 200 plus. Of course, we'll cover that in trending markets, but we also have precious metals under pressure. Gold trading off about $4 today at $1321.60. It's traded to a low of $1318.80 and a high of $1335.90, about 1/3% on the day. COMEX silver, 1/3% in terms of the decline, between 5 and 6 cents, $18.94. That is our current print. It traded to a low of $18.85 and a high today of $19.35. So traders, we are looking at a daily chart. This is FX, or what we call spot gold, currently trading off about $9 at $1317.88. As I said, net change down about 0.7%. There's a couple things that we can definitely see in this market. It's certainly not under the kind of pressure that we have associated with the equities markets in terms of straight support. And of course, we'll have to see if this holds, but 1306 is a pretty darn critical area. It's an absolute, really a line in the sand, so to speak. The reason that I say that is we have first of all, an important fib retracement level, and that is a 38% retracement level right in here. It's a retracement from this entire rally that began at 1200 and took the market up almost to 1380. I've got it marked at 1373.30. I also believe that that was the end of our first impulse wave. I believe we had some sort of an A, our B, and our C here in terms of a wave count. 1301, it hits that area again, so we have a defined double bottom in the area. And even with this market coming down, of course, this double bottom, simply put, has to hold. It's critically important that it does hold if we're going to remain in a bullish stance. Now, when we look at the big picture in terms of what this market has done, we know that this market absolutely bottomed out end of last year, beginning of this year. We're labeling that the conclusion of a major A, and that was probably, at least in my lifetime, one of the greatest declines I have ever seen, probably that anyone has ever seen, as we watch gold lose roughly 50%, trading from 1900 down to 1050, almost 1,000. So a tremendous move down. But from there, look at these rallies. Now, I have been doing this for quite some time, and I have watched this market trade both in rally and corrective mode. And typically traders, in a rally mode, you'll see this market move anywhere between $100 and $130. That's a really good, strong rally. So when we've got the market marked off here, 1047, we'll round it to 1050. And considering that 1047 to this first blue line, this is 1171, so you've already got a $100 move plus, but it didn't stop there. In fact, it traded all the way up to about 1260. So this rally right in here was approximately a $200 rally. And then after having that $200 rally, of course, the market did retrace a little bit. That's right in here. And as this market retraced right here, it then went to a higher high, this time trading to about 1280 in terms of market high in the price. Now, from there, we did have a correction, and what we have labeled as an irregular ABC for our wave 2, this being our wave 1, but we had our A, our B, and then our C here, concluding that, and most importantly, not only concluding a wave 2, but beginning a wave 3. Now, wave 3 should never be any of the shortest impulse waves, so just figuring, and this is where we get our calculation of looking for the market really to track above 1400, is that if this wave 1 and then our current wave 3 are just equal, well, look at the move that we had here from 1050 on the bottom to 1280. So we had literally about a $230 move, a $230 move off of 1200, which is where this begins, is going to take you to 12, then to 13, then to 14, and then we've got another $30 on top of that. So about $14.40. And that's where we've come up with those numbers to really try to calculate an upper end to where we think this rally could end. Now, obviously, when we look at the market trading in this kind of a defined range that it has been, and there's absolutely no doubt we've got these highs up here at about 1380. We've got these lows down here at about 1300. So we truly have a basically nearly defined range in which we've seen the market trade within this $80 core. We certainly see some real support in this area, but we also have to be very cognizant of the fact that we see some real resistance. And in fact, when we look at these series of highs, we have had a series of lower highs, which is not what we look for on a market that we believe is going to move up. Now, we also know that this market is absolutely data-driven and not technically driven at this point. It's on pins and needles as it waits to see what the Fed is going to do, how the equities markets react, how the turmoil is basically ramping up and reacting to that. At the same time, we have to acknowledge that over this last couple of weeks, we've seen this market really decline after really spiking up. And the key, as far as I'm concerned, is a couple of areas that we have looked at. It has absolutely broken below this one area, which is right here today, trading at 1317. So the fact of the matter is, are we going to see this market continue to oscillate within this trading range here? Will $1,300 hold as a base for gold? I think it will, but we'll have to see. However, until we get more evidence and see this market unfold in terms of where the highs are and where the lows are, we are remaining flat in this market, at least for today. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.